I think one of the things that many people lack is the ability to spread money and capital and the risk. In terms of, diversifying their portfolio, yes, people say, okay, well, if I get some stock of Home Depot and Nvidia and Apple, all of a sudden you've got some diversification. Now, the thing is that the market usually tends to go in the same place with many stocks. But what you'll find is there's certain asset classes or assets that will go down when others go up, and others go up when some go down. So what we want to really do is spread our risk and spread our capital, and as well as spread position types. Like if you're able to trade options, you can do a few bullish positions, a few bearish positions, some non-directional positions. That really is a nice feature and function that you can do. However, if you're trying to find asset classes that are not moving within the group, things that are non-correlated, this is also much better and more powerful because now you don't have everything moving together. So if we start taking a look at a lot of the asset classes and we just pull up a kind of a let's go to the market watch. What we'll see here is you'll see a lot of these. Let's go to this indice here. What you'll see is there's a few things that are red, but most things are green. So if you go in and you, let's say, take this basket of stuff and you get some United Health, you get some Apple, you get some Microsoft, and you think you're diversified. The issue is that you're probably not diversified because when Microsoft goes up, usually Apple goes up, or when Apple goes up, usually Adobe goes up. They all kind of work in tandem and together. So on top of spreading risks and capital amongst different strategies like an iron condor or non-directional trade and directional trades, you can also spread things into things that are non-correlated or things that are moving a little bit different. You can see Nvidia here is actually pulling back and moving down, whereas the rest of the market is moving to the upside. So you can see it doesn't correlate as well. Same thing with lows. So how do you do that? Well, what we can do is we can do a scan, and let's just scan for things that are $11 to, let's go to $666. I'm going to scan things on the weekly chart here. And the reason I'm doing that is I want the options, or I want there to be options, and I want them to have weekly, so that way they're more liquid. So this way we're not dealing with something too cheap, shall we say. Okay, the next thing is we'll kind of leave it at that. Let's keep it simple for a minute. Now, one thing I'm looking at is if we sort by the results and look at it, we've got 474 results. Now, what I want to do is sort by net change, and what you'll find is, because the market right now is green, we're up about 16 points on the S&P. You can see here's the percentage change on the stocks. So look at all of these stocks here that are bullish, 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 bullish. So these are all moving fairly well to the upside, and that's all great, but they're all moving kind of together. So when you start looking at these things, it's like, man, if you get this one and that one, and they're both bullish, and then the next time they're moving down, then they're both moving down. So if you're trying to find non-correlated assets, what you could do is actually sort by the other way, so the percent change the opposite way, and you can see things that are moving down on today's up market is Urban, Deere, Autodesk, JWM, Nordstrom, Nvidia, it's a little bit of an outlier. Even Tesla is a little bit of an outlier. Caterpillar. So when you start looking at things like this, it's like, ooh, actually, I may want to check out Caterpillar. It's like, oh, this one is moving down. And let's get rid of this thing. So this one's actually moving down while the rest of the market's moving up, or Nvidia right there, or Urban. Okay. You can see also moving down right after earnings. So this is one of the ones after earnings. So this is one way to start looking at those things. You can also look at, hey, Zoom moving down 2%. Okay, great. We're finding another candidate. So this could also be a way for you to find stocks that are maybe a little bit weaker or undervalued and maybe pulling back right now. But it also allows you to spread the risk and tie that's happening amongst all the other asset classes. So when you start doing something like this, it allows you to see things that don't move with the overall market. And that allows you to be a little actually more diversified than just kind of trying to nitpick great stocks. Because in some cases, it's not always the best to find, okay, an Apple, a Microsoft, and when they're all going up, that's great, and you're making a lot of money. The downside is when they're all going down, you're actually losing a bunch of money. So this is where, in these cases, you're getting some form of non-correlated assets that are moving in a different direction. Because in a lot of other cases, when the market might be going down, these could be going up because they're not hitting the trend. Now, I will say in some cases they will be with the trend. Like I've seen where Caterpillar goes with the trend a lot as well, but it might be this last month or two, it does not. Now, you can also do a comparison and overlay amongst them and see how they are relative to the market. But in this case, what I want to show you is that, hey, look, if you've got XLE or energy going down, but the market's going up, it's just one of those things that might be bucking the trend. BABA, like again, like some Chinese related thing going a little bit down versus the market going up. So this is one way to do that, and I highly encourage you to kind of spread your risk and capital amongst non-correlated assets as much as possible as well, to spread the risk. Yes, people talk about getting into gold and silver and these kinds of things. So you could do that type of stuff, but sometimes you like to trade stocks, and that's okay. So what you'll want to do and take a look at is really just things that are moving opposite of the market. And that group and that cycle will change and shift time and time again. So just keep an eye out for those things and rotate them as needed. Anyways, I hope that helps, gives you a little insight. Truly appreciate all the comments and fellowship you guys submit, request, and post. That's great and wonderful. Thank you so much for joining me. Truly appreciate it. Don't forget to check out the Traders Fly website to grab some freebies, downloads, PDFs, courses, you name it. There's a bunch of stuff there on the website, and even one-on-one coaching and sessions with me. Anyways, I'll talk to you later. See you next time, and enjoy the week ahead. Take care.